Industrial Logistics Properties Trust. We own and lease industrial and logistics properties within the United States. Our portfolio has 411 properties, 39 states, just about 60 million square feet. Our portfolio is 95% leased with a weighted average lease term of 7.6 years. FedEx is our largest tenant, which represent about 29% of our annualized revenues, and Amazon is our second largest tenant at 6.7%. Really what makes ILPT unique is our Hawaii footprint. We own 226 properties in Hawaii, and it's our crown jewel, we like to say, because they're really strategically located near the seaport, airport, and the CBD. And, we joke they aren't making any more land in Hawaii, so the scarcity of land really is a differentiator for us. Sure. So ILPT was spun out of Select Income REIT in January of 2018, and we really spun it out to unlock the value of logistics properties within that portfolio. And at the time, it was spun out with 266 properties, just 28.5 million square feet. And, I think really the industrial sector was seeing just the beginning of demand from e-commerce and investment. And so that was really the genesis of why we thought it would be good to have a company that was focused just on industrial. Sure. So, I think really coming out of COVID and through COVID, we've really seen huge demand in industrial properties and investment. E-commerce continues to grow. And for us, we have, again, back to Hawaii, it really gives us this specialization where we've been able to see huge roll-ups in rent within our Hawaii portfolio, sometimes 30 to 50% at lease expirations. And I think, there's been a lot said about tariffs and the impact to the industrial sector. And for us, we've really seen tenants unsure of what is going on with their business, deciding to renew in place versus look to build-to-suit opportunities. So I think, we're really focused on tenant retention, mark-to-market growth opportunities, and just managing our portfolio efficiently. Yeah, so I think really for ILPT, our leverage is at 12 times, which is very high compared to our peers. And so for us, we're really looking on opportunities to deleverage. We did a refinancing a couple months ago, which allows us some opportunities to sell assets because the way we structured our debt is a little more favorable to release properties. Additionally, we have opportunities we have a joint venture, it's called the Mountain Joint Venture, and we have one partner that has a 39% stake, and we think there could be opportunity down the line to bring an additional equity partner there that could help us deleverage as well. And so I think for us, the real story is finding ways to deleverage, and I think from there we'll have good opportunity. Yeah, I think, our stock prices has significantly decreased since we acquired Monmouth in 2022, mostly because of where our leverage is. And I really do think there's some embedded value that the market doesn't appreciate just because of where our leverage is compared to our peers. And so I think as we kind of focus on our deleveraging, again, tenant retention, we're very high tenant retention in the 85 to 90%, pretty consistently every quarter. And I think as we execute on those things, I think we'll see growth in the stock price. and we've just in the last 2 months, I mean, it's gone up 60%. So as we've done some of the refinancings, and I think that's helping.